As you can see, I just invested $1 million into Tesla stock and I bought 3,000 shares of this stock. So why did I do this? And why do I think Tesla is one of the best opportunities right now to make a ton of money? I just put $1 million more into Tesla and I think it's undervalued for 3 main reasons that I will cover in this video as quickly as possible. I respect your time. So here's the main explanation, okay? Dan Ives mentioned that regulations are going to get a lot better for Tesla now that Elon Musk is in the White House and he is friends with Donald Trump. So I have an updated price target for Tesla into 2025, but I first quickly want you to watch a 30-second clip to know one of my 3 reasons why I just put $1 million into Tesla stock. And one of the 3 reasons is regulations. Listen to this real quick.
That's bullish for tech. I think, look, a big reason when Trump came in, when you think about con out the FTC, that's bullish for big tech. I think less regulations. And then who's at the table right next to Trump? It's Musk. And I think that's going to also play a big role unofficially in terms of some of these picks and where this all goes. But I continue to think in terms of this AI revolution, it is 10 p.m. at that party that goes to 4 a.m. And I don't see any of these appointments that's changing that party or that party closes early. I think we have a tech bull market that goes well into 2025, 2026.
So Dan Ives thinks that we're going to be in a bull run in 2025 and 2026. I'm going to give you my take, but I'll start off with he's absolutely right about regulation. The reason why you'll see here that I put 3,000 shares more into my portfolio. I already had a couple of put options. I sold a put option at 235 and I also sold a put option at 300. Both those options expire in December, but I was tired of selling puts, guys. Selling puts has been good, but I just decided that I'm going to buy some shares. I'm tired of waiting to enter Tesla stock. I want to be right in Tesla stock, so I bought it 3,000 shares for $332 per share, dumping $1 million into the stock. So far, I'm up $36,965. Now, you don't have to have a huge portfolio to invest in Tesla. Let me give you the whole reasoning. The reason why I put $1 million more into Tesla is it's clear to me that the stock is going to $500 per share in 2025. The valuation of Tesla looks pretty big, but it is going to get bigger for some key reasons. So that's the short answer. If you need to bounce from this video, $500 price target, I think that you should follow my last video where I said buy $330 call options, leap options into September 2025, and just ride Tesla higher. I'm so confident. I put $1 million and I actually showed it to you here on my screen of real money, not just talking like other YouTubers, showing. All right. So that's it. Hope that you enjoyed that. Now, if you have some time, let me talk about all the reasons that I have for Tesla and why I made such a big bet. This is a big bet in my other portfolio. This portfolio I typically only cover with my one-on-one students, and I take big bets there, different types of strategies. I do some option buying. I also do margin trading. I do a whole lot of interesting strategies, but it is for 6-figure and 7-figure investors that already have a 6-figure portfolio that are trying to scale. I still do one-on-one coaching. I still do one-on-one coaching in Discord, but this is just my highest level where I'm taking on a little bit more risk, and that's why I usually don't show this portfolio on YouTube. With that out of the way, let's talk about what Dan Ives really said. And let's disregard his pink suit because what Dan Ives kind of wears is kind of a little bit ridiculous, but the man's been right more often than he's been wrong. So as long as we're getting the results, I guess he can wear all the pink suits that he wants. Look, Dan Ives is bullish for the next 12 months, and I think this is for good reason. With Elon Musk now helping Trump, and in general, Dan Ives was just bullish in 2025 on the tech sector. He had a different clip where he said, fire, right? He said, fire, this market's on fire. And I completely agree. I think that we're going to see a lot of upwards movement. And the big reason for that is, guys, that we do have a dovish Fed. So with interest rates going down, this is very positive for tech companies. Specifically, tech companies can hire more workers and they can raise more money. And a lot of these multi-billion-dollar and trillion-dollar companies, you think they're taking out debt because they need the money? No, they just take out the debt. If it's cheap debt, it makes sense. Okay, like I said, I use margin. These companies are also technically using margin. You think Apple needs debt? No, they don't need it. They're just taking out cash so they can hire more employees, so they can spend more on marketing, they can grow their business. And if debt is cheap, why not? And with the dovish Fed, this is going to be very, very positive for Tesla. Robo-taxis aside, all the other stuff, AI stuff that I'm going to cover in this video aside, this is very bullish because the dovish Fed intrinsically just creates more value in the stock. Okay, Warren Buffett has talked about that. Now look, I'm making money hand over fist, guys, on Tesla, on my other AI plays, and I've been absolutely right. right? And I believe, I'm very confident in 2025 that I'm going to be right on Tesla, and I made a $1 million bet. Now, I was telling one of my doctor students this, basically. I was having my one-on-one session. I said, listen, doc, it's kind of like a big harvesting season right now. If you were a farmer and you had all these fruits and veggies, you're eating all of them, you still need to store them away for winter. Because guys, right now it's the easiest time to make money, and we should make as much money as possible because we are going to get a pullback in the market eventually, right? I'm not going to be an idiot here and say, we're going to go up forever. No, we're not. We're going to have a pullback at some point. But while the opportunity exists, you want to make as much money as possible. And that's the same way. You want to take as many fruits and veggies as possible and freeze them for the winter. So that way, when the tougher times come, your portfolio is up 40, 50, 60, 70%, or even double. We're going to give some of it back. That's inevitable, okay? Even if I protect myself and I hedge my portfolio to my best ability, we're still going to see a pullback at some point. So right now, it's important to make money hand over fist, guys. Like, it is the easiest time, all right? So that's one thing that I want to point out, that with Tesla, I think that we still have some more room to run. So as we approach $500, it's not going to be smooth sailing. We're not just going to go up like this. We're going to get some volatility along the way. That's why I'm selling puts, and that's why I'm actually going to be doing leap options. I'll show you that leap option example a little bit later on in the video, but I want to give you more reasoning. So I said I had 3 reasons. To be honest, I honestly hope that you guys don't mind that I have more than 3 reasons. I did give you guys a little summary in the beginning. I have a few more reasons, hope that's not a problem. I'll leave you alone after this video, I promise. Look, there's $7 trillion on the sidelines, all right? So when I think about the $7 trillion on the sidelines, that is going to get invested in the market, and the top stocks are going to reap the most rewards. Mega cap stocks reap the most rewards because they're the safest and they're deemed the most investable by institutional investors. Basically, if you look at the facts, guys, Tesla's market cap increased $300 billion following Donald Trump's election as the 47th president, all right, with the media and analysts speculating on its implications on Tesla and Elon Musk, right? There's a lot of speculation, and the stock is up a lot. But please notice, the stock going up $300 billion or $330 billion is not just retail investors. It is not just retail investors. In fact, this stock has gained a lot of momentum because of institutional money, aka smart money. All right, retail investors like you and I are not really moving the stock, especially not Tesla. It's a mega cap stock. Even my $1 million bet is nothing. It's like just going into thin air, basically. But I will say that institutional investors are investing in Tesla, and the volume is very clear. And this is something that I like to follow. When I see a stock that's up a lot, it's up a lot for a good reason. These institutional investors are not stupid. So I'm telling you right now that Musk's close relationship with Trump will enhance Tesla's prospects through favorable policies on manufacturing, okay, on innovation, and overall economic growth. That could be in the form of different policies. Some of the policies could help reducing energy costs, deregulations. Obviously, Trump is a fan of that. There could be tax incentives. I know there's going to be an EV tax credit that's going away, but there may be some new tax incentives coming in. Corporate tax reductions, all right, that's going to be a big thing as well. That can impact Tesla very easily. And all of these little benefits, trust me, they add up. They add up to the revenue, the top line, and they also add up a lot to the bottom line of Tesla, which just further increases what analysts are going to be, thinking about the stock. And now, guys, also, I want to tell you one thing about analysts, and I'll tell you the dark truth here, okay? Because I worked on Wall Street. I've seen how analysts work. I have a degree in this stuff. And to be honest, analysts are likely to revise Tesla's price target up, but not because the stock's actually good, but it's still a good reason. The reason why they actually will revise their price target up is because as Tesla surges, these analysts feel stupid. They feel dumb, all right? Because as Tesla goes up and they have a price target of 150, they have to raise their price target, which creates kind of like that spiraling effect, okay? As analysts are like, wait, I'm way too far from Tesla. I look stupid. Let me raise my price target up. More analysts copy each other. It's a copying game, guys. You think these analysts are not looking at each other? They're just copying each other, all right? So when the company surges in value like Tesla has and it reflects in the company's growth, the analysts are like, well, duh, this was an obvious play. So they start raising their price targets, and that's actually going to help Tesla's price per share maintain its value, because as more analysts raise their price target, more retail investors realize this is a good opportunity. Now, guys, I understand I'm not early on the trend. I was early on the trend, but in today's day, I'm not early on Tesla. But you don't have to be early to make more money. That's just a fact of it. My parents actually bought Tesla stock, and it was kind of interesting because my parents believe more in hard assets. My mom and dad have like real estate and stuff like that, and they don't really believe in the stock market as much, right? Because growing up in the Soviet Union, they just don't have that belief in the government or in the processes like a stock market, right? Back in Soviet Union, they didn't have stuff like that, right? So they believe in hard assets. And now they bought Tesla a couple of years ago for a really high price target actually. And as Tesla fell down, I told my parents to dollar cost average and to buy more shares. But my dad said, nope, I have enough in it. And now that Tesla has surged back up, which I was saying it will recover. I was like, Dad, it's going to recover for sure. Trust me. He didn't. He said, oh, okay, I'm just going to wait. Now that Tesla popped up so much, he really kind of regrets. He's like, well, I should have dollar cost averaged more. And this is kind of like something that you really want to pay attention to. And that's the reason why I put another $1 million into Tesla stock, is because I'm just dollar cost averaging. I'm dollar cost averaging up, and there's nothing wrong with dollar cost averaging up. I'm clearly up already $37,000. I put out this play in my Discord community, and we're making money on it. If I see a shift in demand, I will absolutely, either cut the position, I will hedge it more aggressively with covered calls. I may even buy put options. There are option strategies that I do cover when I do my one-on-one coaching, because option buying does deserve to be in your portfolio. However, option buying is something riskier, and if you're a beginner, you should be sticking more to selling options. But option buying can be very lucrative, and it can be a very good hedge. Just it is an individualized basis, which is why I don't really cover it as much on YouTube. Now look, so last thing I want to say is the reason I put $1 million into Tesla is because I believe in their mission. I believe Elon Musk is going to continue executing. I believe this is an AI play, and Tesla's market cap will likely be $2 trillion in 2025. So I'm going to leave you with this 3-minute example on a leap option on Tesla, which I just covered a few days ago, but I think it is super valid. If you don't have a big portfolio and you don't want to just buy shares of Tesla, I think it's super valid for you to go with a leap option. So here's a 3-minute example of a leap option and how I would play Tesla right now, as well as selling a covered call on the leap option in this short 3-minute example. You can really reduce your risk, because when you're buying a leap, your maximum loss is really limited to the leap option premium that you pay. In this example, it is going to be roughly $8,400. So, that is a lot less than having to put up 100 shares, which is going to be around the $35,000 mark. So here it's a lot cheaper and it's a lot more efficient. So that's why I like the limited risk nature of leaps. And now the third thing, as I said, there's 3 things, is there's just an extended time horizon. So leap can look like shares. It can really look like shares if you buy a long-term leap. It's really functioning in the same way. If I expand this option right here, this delta is 0.66. So it's not as high as 70 or 75 as I usually say, but it's close enough. You're getting a lot of benefit. If the stock goes up to 400, so basically it'll go up by $50, and this option right here will be $50 times the 66 delta. All right, so that's going to be about $33 higher. $33 higher. I did that math in my head real quick. Really love math back in school. $33 is going to be how much this option would rise. And because that $33 is actually a lot of money on $84. So if Tesla goes up by 50, this option increases by 33. 33, as a portion to 8,400. So 3,300 is what you would make on $8,400. That would be like around 40% return or so. 40% or so return. But, if you do the math, if Tesla goes up by $50, that's really only a 15% return or so on the Tesla stock. So had you had Tesla stock, you would make about 15%. But if you have this leap option, you're going to make about 40%. So you have almost a 3x leverage factor here with the leap option. You get almost 3x the same return if you were to use the same capital, or basically you can think about it as you're able to use 1/3 or, about 40% of the capital. So instead of, putting out, 35K, you're only putting out 8,400 to get the same benefit. And if the stock moves up, you get huge benefits. You can close at any time. That's also what I want to point out. You guys do not have to hold until expiration. The reason why I have a Discord community is because obviously it is a case-by-case basis. I can't just blanket statement say, do this with this situation, because the situations vary and the market does pull back, and we do get bear markets, and we do have changes in volatility, and we do have sometimes bad volume or bad bid-ask spread. There's so many things to consider, and I'm trying to educate you guys as much as possible, but simply said, leap options just make a lot of sense. If I wanted to reduce the cost of a leap option, I would simply sell call options to reduce the price. You can pick various different expiration days. So I can go for August, I can go for June, I can go for May. One is not better than the other, guys. Option trading is all about choices and preferences. All right, it really depends on your risk appetite. For me, let's just say we're going to go for March 21st. I'll give you this example right here. This is about 115 days out. And this is the time frame I'm going to use, because I said I think in Q1 we could reach 400, but it could be a little bit early in Q1. So I'm comfortable enough to go for something like the 390 call option right here. So if I sell this call option I will collect $3,000 and I can reduce my cost down to only $5,000, give or take $5,290. So by reducing my cost here to $5,290 or $5,300, that's fantastic because now I get even a bigger leverage effect than I mentioned earlier. I hope you enjoyed that example. I also hope that you appreciate my transparency of sharing my portfolio where I actually invested $1 million of my own dollars into Tesla stock. I'm going to keep sharing my stuff with you guys here. Make sure that you're subscribed. And if you want any coaching or one-on-one time with me, go ahead and check out the first link in the description. And I'll catch you guys in the next one. Have a blessed and happy day. And let's make some money, but let's make it safely.